I got into financial issues when I was like 26, 27. Like basically, if you pay late, right, they don't give you a notification.
Do banks want me in debt?
How banks make money, right? They
Wow.
What I heard was that you just early on sign a credit card, then just put it aside and don't use.
So there's a couple of things that can happen.
Financial fraud scamming system, where is it going?
So you actually are making money off the scamster. Put in $100 and then, right away, it becomes $120.
Wow.
What do you feel is maybe one of the biggest misconceptions that people have when it comes to investments?
I think
Oh my god.
That is so sick.
Most of us think we understand how money works. You know, we've done the research. We are mouth hacking. We are trying to move our money from account to account depending on the interest rates. Some of us have picked up investing and trading to try to grow our money. But here we all are, we have full-time jobs. So today we are getting a true expert to get to the bottom of all of this. She has over 15 years of experience in the banking world, and she's actually one of the few people who are currently actively building our banking system.
Let's go.
Let's welcome the CEO of MariBank, Natalia. Go!
Wow. Wow.
What a young banking CEO. That's crazy.
Thank you. Thank you.
Wow.
You start work at 15, is it?
Right.
Wow, you're very kind. You're very kind to me.
Okay, so MariBank, if you are not sure where it's from, right, it's actually C Limited's very own digital bank. And if that sounds a bit familiar to you, it's because C Limited also owns Shopee and Garena. Yeah. So they're actually...
MariBank also tempts you every time you check out something at Shopee.
Yeah, the vouchers very tempting, very good.
When you open a Shopee app, right, every time at checkout, then you are tempted by the MariBank credit card.
Yeah.
$25 off, $10 off, $50 voucher pack. What is a voucher pack? Don't know. We need to find out.
sounds good.
$15 off and $15 off. All different vouchers.
Very attractive.
Yeah.
Before we jump into the first question, I must disclaim that this episode does not contain financial advice. Okay, make your own decisions. Okay.
Make your own decision. But so true.
Okay, I want to ask, I don't know whether this is a misconception, but I somehow have the impression that like I put money into banks and then banks make money by taking my money to go and invest and then they earn the profits. Is that true or false?
In terms of how banks make money, right? When they collect your deposit, they pay you some kind of interest rate on it. Then with that deposit, they can lend it out to other people who need to borrow money. And then they charge an interest rate on that.
Okay.
So that difference between the interest rate, what we call like net interest margin, is forms part of the interest income for a bank.
Right.
Then in addition, because banks have to hold certain buffers to make sure your money is safe, so some of it cannot be fully loaned out. So will be deployed into different sort of what we call safer assets, and those have certain returns lah.
Right.
Like
I
that.
thought it's like I take Dan's money, I use it to invest, then I give him back some of the earnings, that I keep the rest for myself.
There are companies like that, but it's not a bank.
I see.
They're loaning out, and that's why it's the interest rate to borrow is higher than the interest rate to
Then now we add on more banking products. So a bank can also sell like investment products, for example.
Right.
So those kinds of products, banks make money by earning a fee.
Yeah.
So then you have another component of income for banks, which is a fee income. So two big components. One is interest income. The other component is fee income.
The fees are easier to earn, I would assume. Don't have to lend anyone money.
Yeah. So
Even
No, but
transaction
it's
fees.
just like I would think that loans is loan a substantial amount of a banking revenue for a typical bank.
yes, usually it is. lah.
Yes. I didn't expect so.
But on a moral standpoint, right, like do banks want me in debt? You know what I mean? Because that's how they're earning the interest rate money. But then at the same time, it is not good for me as a human to have debt, right?
That's not true, but okay, let's go into that first.
Oh, that's not true. Then wow, why?
If you're familiar with Robert Kiyosaki and Rich Dad Poor Dad and the concept of how debt is actually quite good, actually it could be used in I think traditionally we've been brought up to feel that borrowing money is bad and we need to always return that. But I think there are ways to use that in a way that's healthy and be able to use other people's money while not necessarily using your own.
I agree with you. So I think actually when you think about debt, right, I think there are different ways to think about. One is, are you taking on debt that's too much for you? That means that you cannot pay off that debt. Then that's not sustainable and that's not good, right? But otherwise, if you think about how you manage your cash flows, that helps you achieve certain objectives. So, okay, for example, the easiest one I think people can relate to is like buying a house. Yep. Right. So in Singapore, generally, property is quite expensive. I mean, nobody's going to have that amount of cash just sitting around, whether it's 300,000, 400,000, 1 million, whatever it is, whatever kind of property you're buying. You're not going to have just that amount of cash just sitting around that you can just cough up and just pay down in one lump sum.
Yep.
So typically a debt or financing structure or loan will help you be able to pay that over time.
Yeah.
Yeah. So I think there's really good reasons why people might incur debt. But I think the main thing is managing your debt, to say how do you manage that monthly repayment so that you can pay it off over time.
Yeah.
But is it like also the bank's, I guess, so-called responsibility to help make sure that somebody is not putting themselves in overwhelming debt?
Yes. So basically all banks, so including MariBank, what we'll do is when you apply for what we call a credit facility means like borrowing money from bank, we will assess you based on like your income, right? And we will also assess to say, do you already have a lot of outstanding loans with other banks? And therefore, what's your ability to pay off if you take on this loan with MariBank? So then all of that goes into calculations that will determine how much we can lend you, which is called like your credit line, how much you're eligible for. And then also the tenure. So you can borrow this amount up to over 5 years, 2 years, and so on.
Like this one I can follow because I think it's in alignment, because it's in the bank's interest also that you don't default,
correct.
right? But where I always question is, let's say certain banks that have credit cards and then there are late fees and then whatnot and interest rates on top. I've once banked with a trade bank that basically if you pay late, right, they don't give you a notification until the second or third month. But this was years ago. This was how I got into financial issues when I was like 26, 27, like almost 10, like 8, 9 years ago, where they really just don't. And I ask all the customers that I know that banks with this bank, and they just don't let you know if anything's late, because sometimes you miss out. To me, there's no alignment there because they maybe want me to pay the late fees.
Okay, I think I'm hopeful that practice has changed. So I think we take a very different approach at MariBank. I think one, for sure, before your payment is due, we actually remind you.
Your first payment is due.
Every month on your credit card, we remind you. Secondly, actually within the app, there's an option to do an auto repayment. So you.
Oh my God.
That is so sick.
Why did we take so long for a new digital bank to do this?
So you auto deduct from my bank account that I assign, is it?
Yes. So you must be linked to a MariBank account. But
they must have access to the funds.
Exactly. You must have access to your funds. So you turn it on, then every month it will do that repayment for you.
So you can go along your Mari way.
Yes.
Oh my God, that's not the meaning of the bank, no, right?
No.
I don't think so. I hope not.
It's Let's Bank.
So Mari is from Mari Kita.
Yeah, it means let's.
It means let's.
Mari means let's. Like let's go. Let's go.
Yes.
Oh, 666.
For people who might not be familiar with digital banks, how are they actually different from traditional banks?
By people, she means us.
Okay, let me explain. Actually, the main difference is that digital banks are not allowed to have physical presence. That's it.
Oh.
Otherwise, a digital bank is pretty much like a regular bank. So Singapore banking market is really very I would say mature and established. So it's really to encourage sort of new ways of banking or new ways to address banking needs in Singapore.
Okay, but I would feel like the biggest hurdle obstacle is convince someone that come and bank with us. By the way, if you have any problems, you can't come down to a physical location and get help.
Interesting. So I don't know about you guys, but for me, actually, I don't enjoy the experience of going out to a physical branch, queuing up, taking a number, meeting a person there, when you can do all of that online. I don't know about you guys, but isn't it mostly
No, actually
online?
now a lot of traditional banks, they even do the phone call booth. So I go down to the bank to call someone.
You're talking over a video to somebody, right?
It's true, the video ATMs.
Yeah, so I think the idea really behind digital banking is that actually you can do all of that, but through your app.
Okay.
Investment products is one of the other things that banks do have. What do you feel is maybe one of the biggest misconceptions that people have when it comes to investments or like passive income?
The idea behind passive income, because of the name, right? Passive, right? The idea is like you don't need to do anything, then this income will just come, so to speak. I don't know. I get people always are very drawn to this as passive income, but actually there is still work involved in passive income, right? So the idea of passive income is that you build up a certain amount of capital. So first there was some work leading up to you building up that capital, whatever that savings was. Then you now need to manage the returns you get from that capital. I think generally when people think about investments, for people who are new to it, it looks very scary and daunting because like there's so many options out there. It's like, okay, you can invest in stocks, you can invest in bonds, you can invest in like equities, then there's like gold. Mutual fund, there's gold, you can invest in gold, crypto, there's like so many options there. Then within each category, there's like a lot of options. Oh, like Bitcoin, Ether, then within like mutual funds, you're like which unit trust to buy, there's so many different brands and so on. So one is overcoming that, oh my God, there's like so much, I don't even know where to start. Right? Then the other hurdle is, let's say you have decided, okay, actually, which account do I open? Where do I open the account? Oh, some account got minimum, I need to access like at least $1,000 to invest and so on. So I think these are two big challenges that I've seen. So I think what we try and do at MariBank is, the first one is we curate like the list of options for users. So when you go into the app and you look at investment options, it's not going to be like a whole bunch that overwhelms you. We try and pick the best in class for each category. So we have one mutual fund, we have one income fund, we now have a gold fund. So we try and choose the best in class. Then I think what we try and do is really to say, you only need $1 to start investing. So we were the first digital bank to really come up with this like only $1 minimum required for any of the investment options.
Wow.
I think traditionally it's like minimum $1,000 to start investing with traditional banks. Then even with some of the like so-called fintech, those non-bank like financial services and that kind, right? Minimum is usually about $100. So we really wanted to bring it down to say, okay, just give it a try. Just start off with $1, it's fine.
What's the fee structure for someone to...
So for us, we don't take any fees. So the only fee involved with the products is the fund manager themselves. They charge a management fee.
Right.
They share some of that fee with us, their management fee. But
Okay,
for us, we
right.
don't charge fees, yeah.
Let's say when I have your bank's credit card, right? Then I buy $1,000 worth of goods. So I give your credit card, then I receive $1,000 worth of goods. Now, before the end of the month, I will pay you back the $1,000 of my credit card bill. How do you make money?
When you use a credit card to pay for something, there's a small transaction fee that the bank earns.
Oh, they are not Visa, MasterCard anymore, Bank also earn.
They also earn a little bit, yes.
But the merchant bears that unless they transfer it
Yes.
to you, right?
Yes.
So like you go to some camera shops and they say, cash is this amount, but you pay credit card is 2.5 more. That's the fee.
The
My
merchant,
mom has done this to someone before at a camera shop,
Yeah,
actually.
it's always camera shops.
She say, if I don't use credit card to pay, you give me the discount.
Yeah.
Yeah, they're done.
But I think one of the things that users should look out for when they use credit cards is something called FX fee. So there's a number of credit cards where they actually charge roughly about 3%. So every time you spend and use a card on overseas currency, there's a 3% fee charge on that.
Right.
So I think that's something for users to pay attention to. So I think at MariBank, we don't charge that.
Oh.
Yes, we don't. Yes.
And how you're
I'm
making
hearing
money?
his benefits. Yeah, you guys will...
How this bank is making money?
when you go to Europe, right, and then you pay on the terminal, right, then there's like you want to pay in local currency or home currency, right?
You must
What
pay,
do you press?
You should choose the local currency there. That means you should choose
Yes.
euros.
Okay,
or like in
okay.
Japan, you should choose yen. Don't
Okay.
choose like the Singapore dollar because there's an additional fee if you choose for them to convert for you to Sing dollars.
Just throwing
So
money
I
away.
think-
It's almost always cheaper to pick their local native currency.
There's no fee when you choose a native currency. So when you use a credit card overseas, there's a couple of things to think about. One is there a fee associated with it? So most credit cards today charge a fee of roughly about 3%. So there isn't at MariBank. The other one is the actual exchange rate that you're getting, right? So like what is the Sing dollar to let's say ringgit, let's say you go to Malaysia, what's the actual exchange rate? So for most cards, I think that's quite just a standard rate. Yeah, so I think for MariBank, what we're trying to do is actually for the most popular like destinations for Singaporeans to travel overseas, we're actually giving a much more preferential rate. Yeah, so I think like Malaysia,
Yeah.
Japan, China, Thailand, Australia, all the usual popular destinations are actually
Okay.
giving the lowest rate right now. Yeah.
There is somewhere that I can go to see what is my bank's transaction, the
Exchange
foreign
rate?
exchange rate.
So typically you will see that in your credit card statement after it has happened. So then you will see like, okay, maybe like how many ringgit, then after that how much Sing dollar. So you can see that after it happens. Yeah,
see.
typically.
By then your holiday over already and then you
then
chose the wrong
How I
card.
know? The next time.
Yeah, so next time choose MariBank.
Fair enough.
So you still make money.
The merchant pays a small fee.
That is good to know. Then I know we are aligned.
In fact, I think
You
this
know what I
is
mean?
the...
If I don't know, if you make money, then it's almost as though you're waiting for me to pay late.
Yeah. In fact, I think this is also a sizable chunk. Like besides loans, this is a huge way that banks make money. Because it's almost seamless. Like you don't have to lend out money to get it. It's just people use your product.
Yeah,
and
so
you
for
earn.
banking, there's two streams of income. One is what we call interest income. The other one is fee income. So like transaction fees, these will be part of fee income.
Okay.
But on the note of credit cards, right, can I ask why banks go and charge, right? When I call, then they immediately waive.
Oh, annual fees.
Yeah.
It's too easy already.
Okay, MariBank doesn't charge annual fees.
Fantastic. Okay. So why do banks do that?
It's more historical reasons. I think in the past, there was certain costs associated with it. And I think in the past, there was maybe more willingness by consumers to pay fees as well for certain benefits. Maybe certain cards.
Yeah.
I think credit cards have really evolved. I think in the past was very much like a prestige thing. Then you pay a fee. It's like having a membership, if you will, you know?
It's the
I
4
think-
C's last time.
Yeah, if you think about like previously some of the taglines for credit cards, like, only members can get it, that kind of thing. But I think now credit card is much more available for everyone, right? And it's a transactional convenience, you know? So now I think that the thinking about credit cards has also shifted. So for MariBank, like we don't charge fees on our cards. Yeah.
Yeah.
So I have a question about credit scores because I actually didn't own a credit card for majority of my life actually. I think I only got my first card in my second year of working at Gravity. And then I went to apply because I went to check my credit score and then I didn't have one.
Yeah.
Like, it was like
That's
HH or something if I'm not wrong. Then I'm like, wow, H, so bad. Like other people AA, you know, A, B, C, D, E, F. Then I thought, me thinking that, I have great credit score or whatever, but end up it was the reverse. So then how do banks deal with this? When someone like me, for example, wants to loan money.
If you've never taken up any credit products, like don't have credit card, don't personal loans, you basically are called like new to bureau. Basically your credit bureau record, right, has like nothing. So for a bank, when they look at a customer like that, then they will profile you besides looking at your credit bureau record. They say, what's your age? What's your income? Like a little bit more on your background. And they might be more cautious with lending money at first because there's no record to fall back on to say, what's the repayment behavior like? What's your history like?
So I'm actually disadvantaged if I don't have if I'm new to bureau.
Disadvantage in the sense that you're starting out fresh. And so for everyone who looks at you when you apply to them, they don't have enough information about you to kind of determine whether you're a good or bad customer, so to speak.
You don't have to get a credit card. So after you, for example, get a loan and you repay that, then you also get a credit score.
Yes, correct.
Yes. What I heard was that you just early on sign a credit card, then just put it aside and don't use. I don't know whether that helps to hack my credit score. Does
that count as having a repayment track record? Well, you don't have a late repayment track record.
You don't have late, but it will also show, your record also shows whether it's active or not. So if you have taken it but you've like had no activity, then it will also show like they have no activity.
I don't know if it's much of a rumor or it's just unconfirmed, but if you sign up for a lot of credit cards in one time, that will also hurt your credit score because it sounds as though you need
It will. So whenever you apply for a credit facility, it can be a credit card or personal loan, it will also leave like it will ping your bureau line. So it will, if you do that very, very frequently, to your point, right, it will indicate to a bank that, okay, maybe this person is like in desperate need of money or something like that. So it's also not necessarily a good idea to do that.
What would you say were some of the lessons that you've learned along the way in your career?
Yeah, I think for me, it was very exciting. But I mean, because it was a very new experience, right, to be in the C-suite. And a lot of the decisions, actually, people are coming to you to make the decision. Rather in the past, you're like, okay, what did the boss say? I'm going to follow whatever the boss says. Now you're kind of like the boss.
The box stops
right?
with you,
So I think a lot of it, what I try and do is I try to fall back on experiences I've had in the past or where I've seen that things have gone well. So like from bosses that I've learned from, for example. But the other thing I try to do a lot on is actually I count a lot on the team. I actually try to have a very like open discussion with the team. I have a very collaborative approach in terms of like problem solving together and working together to resolve things. So I think that's what has helped me. Because I mean, the truth is when you first start off, like you've never done it before. So you have to kind of really rely on the people around you as well.
So for understanding your past, you were in a traditional bank helping to build their digital bank. So it's almost trying to create a tech product in a traditional bank. And now you're in a tech company building a bank. Was there really a huge difference or was it more of the same?
There is a difference in the sense that whether I'm dealing with colleagues or, who already know banking and are in banking versus colleagues who are, for example, from, as you say, a technology company. But for me, I think that's where I bring my so-called value at because I've done banking for so long. So I have been able to build out that knowledge and expertise so I can bring that in. And I think for me, it's been very exciting because building banking within a tech company like C, you get to use the latest technology. You get to really start everything from scratch. There's no like legacy or like, oh, this is how we've always done banking or this is how things have always been done.
But then so as a CEO, like what do you do in a day? Like do you wake up at 5 a.m. then?
Well, must start from that kind of day, huh? Like
you do the hour face massage.
Because you are a young CEO in where old money used to be, right? Banking CEOs are old money people, right?
That's right.
But you are young Singapore and digital bank. Is it we are still waking up at 4:30 and then put your face in an ice bowl of ice or
then she need to sprint out.
and then the car will chase.
Okay, no, I have pretty regular start in the morning because I have 2 kids. So it's like getting them up, getting them ready for school and then getting to work. But then in terms of like what I do as CEO, I think the way I see my role is so that there are teams running the business, like running whether it's cards, savings account, whatever it is that they're doing. So I see my role very much as helping the teams, helping to unblock issues, providing sort of strategic guidance, oversight, more that sort of role. So I have a lot of meetings with the teams to kind of help along with these things.
Chief problem fixer.
So which team got the most problem? Just kidding.
She had one in mind.
She was thinking of
she met them 4 times this week.
So I'm very curious, like in Denise's introduction, she mentioned that you've been in banking for 15 years. I'm assuming because digital banks are new, it's mostly in traditional banks. What attracted you from, moving from traditional banking to digital banking?
I think for me, it was really the opportunity to build something new.
Okay.
Yes. I think it's very fun to be part of like a startup, starting something new. And the fact that I've done banking for 15 years means I can bring that background or that knowledge into this new area. So it's new, but like not totally new. Yes.
Was there any part of it was like, like this, like I miss the safety of that traditional banking side, or was it actually, now there's no legacy problems, let's start fresh?
It's a trade-off, right? If you're going with like an established player or you work in a company that's been set up for many years and already successful, then of course there's that safety aspect. But for me, I think can take risks and try out something new. It's just like when you decide to start something of your own, you have to take certain risks and make certain trade-offs. Yeah.
But tough or not? Like how has the journey been so far for digital banks in Singapore? Because many of the non-digital banks, what do you call non-digital banks lah? Traditional banks, yeah.
Traditional
one. So like many of the traditional banks, they also have app. You also can open account online, I think.
Yeah.
And then they also remove a lot of need to go down to the branch.
Yeah.
But then they also have the ability to have that branch, which starts to feel like it might be a disadvantage. How do y'all compete on that front?
Yeah, I think for us, I think we are quite unique in the sense that we're part of a bigger ecosystem. We're part of C Limited, right, which is a technology company but has gaming, has e-commerce. So I think part of the advantage we have is that we can play in that ecosystem with Shopee and with e-commerce. So I think that gives us an edge in terms of exposure to customers, also understanding the data behind some of these customers.
So what you lose in terms of physical touch point, you're also meeting other customers in other touch points that traditional banks don't necessarily.
Yeah, I think you can put it that way lah. Yeah.
Okay,
but can I ask, right? Like, how does someone just open a bank? Is it just like, oh, I have lots of money, you want to take from me?
Can I decide to make a bank tomorrow?
Okay.
Nobody needs to know this, but we're just curious.
We never know.
You never know.
In case you want to start a bank, banking is a very regulated business because you're actually taking customers' money. So you can't just like, I want to start a bank, I'll just start a bank today. You actually need to apply and get a license.
Okay.
There's a number of like requirements that are put in place, to make sure that monies are safe. There's also liquidity requirements, and these are things to make sure that the bank is really sort of solid before they can actually start a bank and start collecting customer deposits.
I think what a lot of people might be concerned about is like, how safe is it for me to put my money into a new bank? Because there's no so-called like track record to look at, and like I don't know whether with any business it might tow, so how do I know like what securities do I have,
Ultimately, because we are a bank, your deposits with us are insured. So as everyone may know, that the first 100, yes, SDIC, so the same thing with MariBank as well. All your deposits up to 100K are insured with SDIC. And I think the other thing I want to call actually about MariBank, but actually I think most banks will have this, is that because of technology that we use, right, we actually now enable a number of capabilities within the app. So you can see these. So for example, if you open up a MariBank app, you can see there's a number of controls that you as the user or the customer, the ability to control to say, okay, for my transactions, I want to allow this kind of transaction only online. I want to allow in person, like overseas. I want to put a daily transaction limit.
Right.
There are a number of these controls that we now kind of put in within the app. So the user is empowered to actually make those decisions and control their flows themselves.
So, I mean, as someone that has to be on top of trends, not just in banking, but in terms of scam operations, right? To prevent scams before they reach us, right? What do you think is this financial fraud scamming system that's happening now? Where is it going?
I think something for listeners to be aware of. It's like really Singaporeans are really being targeted for many, many kinds of scams. All kinds. And I think the scams also have evolved and changed in nature. Right? I think some of the scams now we're seeing, right, are much more patient in nature. They're much more long drawn out. So in the past, we might be like, maybe a fraudster contacted you, transfer money out, then that's it, your money goes away. But now we're seeing things like, for example, let's say job scams or investment scams where the fraudster is very patient and initially you'll see returns. So I've seen a number of cases. The model could be like, you want to make this investment. It could be a crypto investment. It could be anything. You put in $100 and then the customer will think, okay, $100, okay, give it a try. Then, right away it becomes $120 and you can actually withdraw the whole $120.
Yeah.
Then they go in and say,
that's how they get you.
Yes, because then you put in $1,000. Then now you can withdraw $1,200.
Yeah.
And you start putting in. So in the initial phase, you actually are making money off the scamster, off the fraudster, so to speak. And then you think, oh wow, so far I've netted $2,000. Not bad. Then now you're like, okay, then you start to let down your guard because you've actually gotten that $2,000 in actual real returns. Okay, instead of putting in 10,000, I'm going to put in 20,000. Then now I'm going to take up a loan so I can take part in this investment scheme.
And that's when they get you.
And then suddenly you're not going to hear from the person. You're not going to see whichever crypto account that they so-called have opened up for you and so on. Ooh. So I think that's the model we're starting to see where the scams are quite drawn out. And it can last like more than a month, that kind of thing. And you will see real returns.
And even if you know it's a scam, right, it's also a game of chicken. Even if you know it's a scam and you want to make his $20, right? Maybe you try your first 100, then you're like,
I wonder if they get angry. If like $2,000, then I ask you for the bigger sum, then you say, actually, I'm good already.
Yeah. Then they ghost.
Sorry bro, gotta go. My mother called me go eat lunch.
You change your phone number, you do exactly what you do. No, it's so funny how now scams, right? Like scammers now are RMs. They're relationship managers essentially. They are like
No, but they
trying to-
cultivate you, really, they do. So I think that's something for people to watch out for, like, in terms in general.
Yeah.
How does the
Yeah.
bank counter this then?
At the back, right, the bank runs a number of different models, right? So these are like sort of AI or machine learning driven models where they look at your behaviors and your patterns on your account. So they look at your transaction behaviors account for you and then also for the cohort or across the portfolio to say, is something looking unusual? Or like, for example, especially like if suddenly you trigger a large amount of outflow. So typically the small amounts, that will be more like velocity, like kind of how frequently, and then who is the transfer to? Is it to a newly added payee versus like somebody you've always been transferring to?
So what actually happens if, say, you detect that this person is suddenly withdrawing a lot of money, maybe successively, right?
One is at the start, we may prompt something in the app. We pop up to customer to say, oh, hey, we noticed this, are you like trying to do this? Get a confirmation from customer first.
Okay,
right?
okay.
If it starts to look really suspicious and customer move on and just, it continues, for example, the bank might actually just stop that transaction and force you to call the bank, or the bank will call you to say, and then they'll ask you a bunch of questions like, do you know this person? Like, what are you transferring the money for? And so on. So banks now, most of them do actually have this in place.
Does it get awkward? No? Because like, for example, like you find out and all the answers point to a scam. So like, oh, I just met this person.
Yes.
Oh, it's only via WhatsApp. No, I've never met them before. And they say, I want it to go ahead. Do you actually have to follow the customer's instructions?
So actually in this case, we actually work closely with Singapore Police Force. There's this anti-scam center. So actually if the bank is very certain, so let's say MariBank, we talk to you and we are very certain you've been scammed. But you are convinced you are not. You're like, I'm not. I'm making a great return on my investment.
Neither can you actually be 100% certain. Ma. You can only just believe.
Yeah, so then what we do is then we say, okay, if we as a bank feel very, very strongly that this person is a victim of a scam, we still stand firm and say, no, we will not transfer the money out, but we refer you to anti-scam center.
There was quite a big case about this before, that the bank tried to block them at multiple steps, but they keep insisting to the point that they have to get them to sign a waiver to say that like, I bear my own responsibility, and then they lost the money, like 300k, that kind of like huge sum.
Yeah, so it does happen. Yeah. So that's something that that we have to watch out for.
Is there a feature or a product that's actually very underrated that banks try to promote, right? But people actually are very resistant towards it?
I think balance transfer is something that consumers can think about.
Agreed.
So that's a lending product. So basically what it is that for you have a lump sum, let's say whatever the amount is, let's say $5,000, right? You take out a balance transfer, whatever that you owe another bank, for example, you have on a credit card, this bank that you took the balance transfer will pay off that $5,000 for you.
Oh.
And then the structure of a balance transfer, how it's different from personal loan. So personal loan, you pay a fixed installment every month. With a balance transfer, you pay a minimum each time. And then at the end of the borrowing period, whatever it is, let's say 12 months, you pay what we call a bullet payment. You pay back the remaining of the lump sum. So it creates more flexibility in terms of repayment compared to an installment loan. So because an installment loan is you pay a fixed amount every month. So you commit to paying that fixed amount every month. Whereas the balance transfer, there's a big lump sum upfront that the bank disperses for you to wherever you need it to go. Then you pay a minimum amount every month until the end of the borrowing period. Then you pay back the full sum.
But in that case, then is interest rate a lot higher for balance transfers?
So balance transfer actually, today, most of the time, you can actually get what is called an interest-free balance transfer where you pay an upfront fee. So essentially the interest is the upfront fee. So you pay the upfront fee.
Wait, so they're not interest free?
No, but the fee's in a loan.
Yeah, the fee.
Okay.
In personal loans, right? So when I got into credit card debt, right? Obviously, my credit rating dropped. So then I became HHH. I was at that point in my life, right? It was a big debt for my age. It was like 12 or 16K. But it was at that moment where there was no one I could borrow, as in, not no one I could borrow, like there was nothing I could do. Because it spiraled to reach my credit limit. And when I tried to go to, there's some like credit consolidation agency in Singapore, something like that one. I forgot the exact name. And the minimum debt to qualify for that is 45K. Then I'm like, am I supposed to wait until I hit 45K then I can get help? What I did at that time was then my wife used her credit facility of her credit card to borrow that 12K from her credit card. And then we pay a fixed fee of $126. So which means if I borrow the 12K, right, I borrow 11,800 plus because the fixed fee is just minus the 100 plus. So it's not like I need to give you the $100. I already no money, you know what I mean? So basically you borrow 12K, right? I take 12K, I straight away pay you the 120 something. Yeah. So then that one used to clear my credit card debt so it does not roll like crazy again. And then now I pay a fixed, at that time I could choose like a fixed repayment every month. Then the last one is slightly bigger.
Yeah.
So you're almost like transferring the debt, like who you owe to lah.
I'm going from unstructured debt to structured debt.
Right.
Yeah.
Yeah, because it was like 2 or 3 credit cards at that time, and then the late fees were stacking. So like late fee alone is 100 plus, and then there's the interest which is 100 plus percent. I don't know, it was like 20 plus percent.
Yep.
Yeah, so then that was like super insane. I don't even know how much more my debt is spiraling every month.
Yep.
Then changing that into structured debt.
Yeah, I think it
that's
helps.
quite good.
I think it helps to put it into
Yeah.
a more structured framework. So then you create a certain discipline for yourself as well.
Yeah, and I do all that from being $12,000 in debt, blah, 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 to I just now need to spend $600 a month paying my debt.
Yeah,
for a
and
year.
it's more manageable because had you still kept that debt and you only paid 600 to the credit card company that you originally owed, it will still continue to spiral.
Today I'd probably still be in debt.
Yeah. So actually that's a good shout.
The amount that I can borrow or take out from this balance transfer, for example, is also pegged to my credit limit.
It is.
Slightly less than a credit
When I
limit.
signed my first credit card, right, then they asked me what would I like my credit limit to be at. Then I'm like, oh, I can decide.
4 million.
Then I don't know. No, then I thought, okay, I better set a safe amount so that I limit my own spending. Because remember, this is the time where I only spend based on my savings.
Yeah.
So then I put my credit limit at that time, like $4,000.
Yeah.
Then after that, they thought, oh, I want to buy a CPU, right, $3,000.
And then when you want to increase it, like you have to wait like a
Then they
couple
said
hours or
my
a day.
pay didn't increase.
Yeah.
So then I was like, oh, then I don't have reason to go and apply for the credit limit increase. Then I very start like credit cards so difficult.
No, but it's so wild because it's true. Like your first few years, right? Like they peg it to your actual like salary, so you actually say, oh, okay, it's the same amount of my salary. Then at some point, right, after you show that you can repay, right, they just put a wild figure. So like the first time that I saw that it was like 3 times my salary, right, I was like, what is going on here? You're being way too trusting.
So all banks give you an option to reduce it. So when you apply, so when you apply for a credit card, and same at MariBank, if you apply, you'll be shown an option to say, okay, this is the limit that you can get, but you can also reduce it to something lower if you're not comfortable with that. Then again, it could be like you reduce it after you're like, oh, actually, I need it. Then you can apply for credit limit increase.
Is there a risk that you decide, as in, or rather as a bank, can you, how much liberty you have to decide?
Oh, for credit limit, is it? Okay, actually, so this is also quite regulated in Singapore. Basically, if your income is less than 120K per year, then the maximum a bank can grant you is 4 times your monthly income.
Right.
And that's the max. So a bank may grant you less than that also possibly. Yeah.
Okay, so we've come to the end of the episode. Thank you very much, Natalia, for answering all of
Thank
our
you so
big
much.
and small
Thank you.
questions alike. For more information about MariBank, you can check out the link down below. Like, share, subscribe, and we'll see you in the next one. Bye-bye. Guess what FAST stands for? You cannot guess because you know the answer.
Financial accounting standardization of transfer.
It stands for fast and secure transfer.
You can't use
Oh,
the same word in the abbreviation.
Okay lah.
I just Googled it.
I swear, right, the boardroom, right, they spend at least 30 minutes going, we can't use fast again.